Hey there, future Wall Street Titans. Ever wanted to own a piece of your favorite company? That's what stocks are all about. Imagine owning a tiny sliver of Apple or Tesla. Stocks represent ownership in these companies. And guess what? When they do well, you do well. People invest in stocks for many reasons. Some folks are saving up for retirement or dream vacation. Others simply love the thrill of the market. Whatever the reason, understanding stocks is your ticket to building wealth. Think of it like this. Buying a stock is like planting a seed. You nurture it, watch it grow, and hopefully reap the rewards. But remember, just like with plants, some stocks flourish while others wither. That's where fundamental analysis comes in. It helps us separate the winners from the losers. So buckle up, because we're about to explore the exciting world of fundamental analysis. Fundamental analysis might sound intimidating, but it's simpler than you think. Imagine being a detective investigating a company. You wouldn't just look at their fancy website, right? You'd dig deeper. That's what fundamental analysis is all about, digging deep into a company's financials to see if it's a good investment. We're talking about examining their balance sheets, scrutinizing their income statements, and unraveling the mysteries of their cash flow statements. Don't worry, we'll cover each of these in detail later. For now, just remember, fundamental analysis is your trusty magnifying glass, helping you see the true value of a company. It's like having X-ray vision for stocks. So, are you ready to put on your detective hats and start investigating? Let's dive into the world of financial statements. First up on our financial statement adventure is the balance sheet. Think of it like a snapshot of a company's wealth at a specific moment in time. It tells us what the company owns, assets, what it owes, liabilities, and what's left over for the owners, equity. Imagine your own personal finances. Your assets might include your car, your savings account, and maybe even that rare Pokemon card collection. Liabilities, those pesky student loans or credit card bills. A company's balance sheet works similarly. It gives us a clear picture of their financial health. Are they drowning in debt or sitting on a mountain of cash? The balance sheet reveals all. Understanding the balance sheet is crucial for any investor. It's like checking the foundation of a house before you buy it. You want to make sure it's solid, right? Next up, we have the income statement, which tells the story of a company's financial performance over a period of time. Think of it like a movie, showing you how much money a company made, revenue, and how much it spent, expenses, over a quarter or a year. The income statement is all about profits. We want to see that a company is making money, and not just a little bit, but a healthy amount. It's like checking if a bakery is selling enough bread to cover the cost of flour and rent. This statement helps us answer crucial questions. Is the company profitable? Are their profits growing? Or are they losing money faster than a melting ice cream cone? The income statement holds the answers. By analyzing the income statement, we can determine if a company's business is on solid ground or if it's time to say, sell, sell, sell. Section 5. Cash is king, navigating the cash flow statement. Now let's talk about the cash flow statement, arguably the most important financial statement of all. Why? Because cash is king in the business world. A company can have impressive profits on paper, but if they're struggling to generate cash, it's a major red flag. The cash flow statement tracks the movement of cash both in and out of a company. It shows us where the cash is coming from and where it's going. Think of it like a company's checking account statement. Is the company generating cash from its core operations? Are they investing in future growth, or are they relying on borrowing to stay afloat? The cash flow statement uncovers the truth. By carefully examining the cash flow statement, we can gauge a company's true financial strength. Remember, a healthy cash flow is essential for a company to survive and thrive in the long run. Section 6, Essential Metrics, sizing up a company's worth. Now that we've covered the three main financial statements, let's talk about some key metrics that help us size up a company's worth. Think of these metrics as your trusty tools for evaluating stocks. One crucial metric is the PE ratio, which stands for price to earnings ratio. It tells us how much investors are willing to pay for every dollar of a company's earnings. A high PE ratio could mean investors are optimistic about the company's future growth. Another important metric is EPS, or earnings per share. It tells us how much profit a company generates for each outstanding share of stock. Higher EPS generally indicates a more profitable company. Finally, we have ROE, or return on equity, which measures how efficiently a company is using its shareholders' money to generate profits. A higher ROE is generally a good sign. These are just a few of the many metrics investors use to evaluate stocks. By understanding these tools, you'll be well on your way to making informed investment decisions. Section 7, Real-World Examples. Putting knowledge into action. Let's bring all this knowledge to life with some real-world examples. Take Apple, for instance. By analyzing their financial statements, we can see they have a rock-solid balance sheet with tons of cash on hand. Their income statement reveals consistently strong profits, and their cash flow is the envy of the tech world. Or consider Tesla, the electric vehicle pioneer. Their recent growth has been nothing short of phenomenal. Their income statement reflects this success, with skyrocketing revenue and expanding profit margins. Of course, not every company is a shining star. Some companies struggle to generate consistent profits or carry a mountain of debt. By carefully analyzing their financial statements, we can avoid these potential pitfalls. Remember, fundamental analysis is all about separating the winners from the losers. By using the tools and knowledge we've discussed, you'll be well equipped to make smart investment choices. Section 8. Earnings, the heartbeat of a company's success. Now let's talk about earnings, arguably the most anticipated event in the investing world. Earnings season is when companies release their quarterly or annual financial results, giving investors a glimpse into their performance. Think of earnings as a company's report card. Did they meet or exceed analysts' expectations? Did their revenue grow? Did their profits soar? These are the questions on every investor's mind during earnings season. Companies that consistently deliver strong earnings growth are often rewarded with higher stock prices. On the flip side, companies that miss earnings estimates or report disappointing results often see their stock prices tumble. Earnings are a crucial piece of the fundamental analysis puzzle. By closely following a company's earnings reports, you can gain valuable insights into their financial health and future prospects. Section 9. Growth potential is investing in tomorrow's champions. Finally, let's talk about growth potential, a key factor to consider when evaluating stocks. Investing in a company with strong growth potential is like planting a seed that has the potential to grow into a mighty oak tree. When assessing growth potential, we look for companies that are innovating, expanding into new markets, or disrupting existing industries. These are the companies that have the potential to generate outsized returns for investors. Think about companies like Amazon or Netflix. They revolutionized their respective industries and rewarded early investors handsomely. Of course, identifying future growth stars is no easy feat, but it's where fundamental analysis can really shine. By carefully examining a company's financials, industry trends, and competitive landscape, we can identify companies with the potential to be tomorrow's champions. Section 10, conclusion. Your journey to savvy stock picking? Congratulations, you've just completed a crash course in fundamental stock analysis. Remember, investing in the stock market can be a wild ride, but with the right knowledge and tools, you can navigate it like a pro. Start by picking a few well-known companies that interest you. Dive into their financial statements, analyze their earnings reports, and assess their growth potential. Don't be afraid to ask questions and seek out additional resources. The world of investing is vast and ever-changing, but by mastering the fundamentals, you'll be well on your way to building a brighter financial future. Remember, every expert was once a beginner. So what are you waiting for? Go forth and conquer the stock market.